Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. Thank you, as always, for joining us for this week's Market Carver. We got a couple of topics for you. The first, we're going to talk about rate cuts and implications we may see from the Federal Reserve. And then Andrew's going to go and discuss crude oil and some interesting developments there. I found them very interesting from our Monday allocation meeting, so I'm sure you will too. But first, we'll dive into the environment that the Fed is cutting rates into. So between the time that we're recording and the time that you get this market carver, the Fed will have meeting. And barring any sort of major surprise, fully expect for the series of rate cuts to commence and continue on into 2025. One of the interesting setups, so we're not going to actually talk about how much they're going to cut or probabilities, that sort of thing, but instead, look at the transmission effects of Federal Reserve rate cut policy. So when they cut rates, you want to look for what the lending implications will be. And this chart shows you historically what those lending conditions have been for various Fed rate policies. And what you'll see, the top line there shows you the level of interest rates by the Federal Reserve. Sometimes they're higher, so then they cut them, and sometimes they go back higher. Here we stand at 5.5%. The green shows you the net percentage of senior loan officers who are tightening their credit conditions. And what you usually find is that after the Fed cuts rates, things have loosened up in the economy, and then they begin to loosen their standards and can begin to lend, which then helps reinforce and generate some positive momentum in the economy. This cycle is interesting in the fact that credit conditions by the senior loan officers have already loosened their standards. So the implications here, potential implications, are that the wheels of this monetary transmission mechanism is already well greased. And so there may be less of a lag than in previous cycles for getting rate cuts and working their way through the economy. It could be a very good thing. And really, if there is some softening happening, and we do see that in the labor market, there could be some quick work here in reversing that. It could also mean that there is more inflationary implications. If you see credit expand, that can also be accompanied by higher rates of inflation and may make their job and taking rates too far down complicated. So I found this super interesting. And of course, we'll see in the months that come out exactly how this plays out. But this is certainly one positive setup that the Fed has in their favor. So that is the rate cut outlook. I'll pass it over to Andrew and give you an oil update.
All right, thank you, Adam. So one topic we haven't discussed too often on the Market Carver has been the crude oil market. We've spent a lot of time talking to you about the equity market, which is extremely important, but this week we want to start looking at some commodities, specifically looking, again, talking about crude oil. It sets a really interesting price setup, looking at some momentum. Then we're going to actually roll into what Adam was talking about with the Fed cut that's expected this week and how that impacts oil as well. But the first chart I want to show you is looking at a simple weekly chart of the crude oil price. This is as of Friday. So at the end of last week, we were closed right around $68, $69. And this has been a really significant price level, specifically $66 for crude. You can see the pretty blue circles on the screen with that line, to where when we come to this level in price that we often see either back in 2019 and 2020, we saw sellers really step in. And more recently, this has been a level of support where every time prices come down to this level, we see buyers step in, defending that level and sending crude oil higher. So this is another an inflection point, an important price level for the price of oil. If we look at the bottom part of that chart, we look at momentum. And that can just be looked at as if we were stretching out a rubber band within the trend of the price. When it gets really, really low, it's telling us that rubber band is really, really stretched pretty far, and sometimes can make it harder for price to continue in that trend because it's just so far overextended. When we've reached the levels that we were at the end of last week, historically we start seeing momentum reverse higher, and that prints those pretty little green arrows on that chart, showing us when momentum reverses back up and suggesting that price will do the same. And so as we come into this week, we have begun to see oil respond to these important indicators and price levels. We're back at the recording of this video above $70, around $71 a barrel for crude oil. So seeing that 66 level be defended. Now, when we also evaluate the price action and look at the technicals, that's what I'm doing every single day. We also want to be cognizant of what's going on in the broad market, looking at what Fed policy could do. And so that's what the next chart I'm going to share with you looks at historically. What does oil have any type of sensitivity to when the Fed starts to cut rates? As Adam mentioned, this week we're expecting the Fed to do a rate cut. 25, 50 basis points is what the market is expecting. And so I've gone back to the 1980s and looked each time the Fed started a rate cut policy, the first cut they've done, what did crude oil do? Now, we don't have a lot of data to look at here. We don't see a lot of changes in Fed policy, thankfully. But looking at historically, it's pretty much a mixed bag. The last time we saw the Fed cut rates was in 2019, but that was then interrupted by the COVID crash where we actually saw oil prices go negative, if you can believe it, or if you can remember back to that time. Then we go back to the late 2000s, and we did see price continue higher. That's when oil got up to about 150. And then before that, it was the tech wreck. We saw oil prices collapse with a lot of other financial assets. And then going on throughout history, we can see that outside of major either crises or bubbles bursting, that we actually have seen oil have a fairly positive response or a non-response to the interest rate changes by the Fed. And so the takeaway from this is we don't believe that it's overly sensitive to Fed policy. And so it's not something that should be overly impacted by whatever the Fed does do this week. And so we think that we'll continue to see the regular supply demand dynamics within crude oil continue to play out. And based off the work that we're doing, we think that should be positive and continue to see maybe prices move higher for crude oil into the coming weeks and possibly months. What's something we'll continue to be evaluating, but right now we think there is an interesting opportunity in the energy space and specifically the crude oil space.
Great. Thank you, Andrew, for that wonderful update. And thank you to all of you for giving us your time. We sure do appreciate it and hope to see, beginning next week, several of you out at our Thirdly. So as always, if we can be of service, please don't hesitate to give us a call, 800-928-4001, or scan the QR code and book it electronically. So thank you so much. Have a great weekend.